But let's focus on the sector of yesterday, actually. The Nifty Realty Index had hit a 15-year high. In fact, the index is up close to around 40% this year on the back of strong real estate Q2 business updates. To discuss this, as well as the way ahead, we're joined by Adhidev, Chattopadhyay, the Vice President at ICICI Securities, who joins in. Hi, Adhidev. Thanks so much for joining in. Well, it's looking so good, right? The real estate index itself hit a 15-year high, but it's still a far cry away from what we have seen in the peak, I think, of 2008. What's your view on the sector from here on, and what will be your top pick?
Yeah, good morning, Nigel. Thank you for having me on the show. Obviously, as you rightly mentioned, the sector has had a very good run, I think, over the last 6 months. Ever since the concerns on the interest rate cycle, right, maybe the interest rates not going up further from there. I think that is where the sector started to, again, rally. At the same time, even though prior to that, companies were delivering on the numbers. It's not that there was some slowdown. It was more on the perception of a slowdown which may happen. Obviously, that has not been the case, and companies are just going stronger. And consolidation story, which obviously has been playing out for quite a while in the sector, I think that is finally, I think you're seeing that the leading developers, right, whatever launches they're bringing to the market, right, that is being received well by customers. While historically you've seen last, like prior to that, people are preferring more of ready-to-move-in inventory. But I think that confidence has come back among customers that there are these few developers who can deliver a good product and deliver on time. And that is where you're seeing the residential sales also coming through based on the operational...
Got it. Adhidev, let me ask you that one often asked question, where are we in the cycle question? What is your sense? We had somebody yesterday who said, well, we are in the second year of a 4-5 year cycle. Do you believe that? And if yes, I mean, what's your view basically? Go on.
Yeah, so see, obviously this sector has now got a listing history, right? For if I take it to 2007, we have almost now 16 to 17 years of some listing history for the sector. And what you have seen in the previous, bull cycles, right? Initially, when the exuberance was there in buying, immediately there was an increase, sharp increase, I would say, in the residential prices, right? That is what happened in 2004 to 2007, and again in 2009 after GFC to 2013, right? Prices almost doubled in many areas. But this time around, what you've seen, I'm just taking the post-COVID time from maybe from FY22 to currently, prices have not gone up very significantly. We are still seeing moderate single-digit, maybe 6 to 7% annual price increases. So I think what has registered well, even with the developer community, is that you try to keep the price hikes in line with the salary or wage hike growth, and focus largely on volumes and execution to drive your cash flows. So I think that learnings, what even developers have, has also played out well around this time. And where are we in the cycle yet to answer? Yeah, so that's one of the things that I think price growth, right, has been moderate, but also at a point where it's a sweet spot where buyers are receptive to it. So till this time, this equation works out well for everyone. I think the cycle is, good to go at least for another 3 to 4 years. That is our view.
So I wanted your thoughts particularly on some stocks, right? Adhidev, thanks for joining in. And, we've had this discussion, I think, over the last many years. We've been speaking and trying to understand that how long is this upcycle going to last? So particularly on names like, say, Keystone Realtors, right? Rustom ji, they talked about a 15% growth in their pre-sales in the first half of the year. Can they do better than that in the second half? And what are your thoughts on stocks like this?
Yeah, so if we look at, obviously, traditionally see the second half, right, starting from September onwards, obviously with the Ganesh Chaturthi. Obviously, festive season is the time for launches, and that's where you'll see many of the developers bringing that inventory to the market. So across the board, if you see, it's not just limited to a few companies. All companies have got a very large launch pipeline lined up for the second half of this year. Now, obviously, some of these sometimes get pushed back due to some approval delays, we don't know. But given all things, the current scenario for launches, I think all the companies should be able to deliver on their guidance or possibly exceed the guidance which they have for this year. So I think that is a decent enough expectation to carry. And I think, as I mentioned earlier, with rational pricing, volume should also come through for most companies.
Adhidev, we've got the entire setup now. You're sounding fairly confident. Various managements as well have sounded quite confident, and the real estate sector seems to have got its mojo back. But our audience will be wanting to know stocks. What are you positive on? The most positive, if you could give us a couple of buy recommendations that you're officially covering. And also in particular DLF, because yesterday after a while, in the last month or so, it's managed to go to its IPO price of around 525 odd. So your view on that?
Yeah, so see, if you, frankly speaking, see, after the rally we have seen the last 6 months, right? A lot of our recommendations we have, at least on the larger names, right, are mainly in, I would say, in the neutral zone in terms of absolute buy. Not many ideas going around right now, as I said. Although we remain constructive in the sector for the long term, but obviously see this, the exuberance of the sector is reflected in the stock prices to an extent. But if we take, a longer view of, let's say, 3 to 4 years, then we do see, again, some meaningful upsides for most companies. This is mainly coming from that whatever project additions which they made, the business development activities, which obviously varies from company to company, which you are not factoring. But on an aggregate basis, stocks we like, even from, I said, from a three of view. So we look at a DLF, a macro tech developers, Oberoi Realty. And on absolute buy, we have Brigade Enterprises and Shobha Limited is what we prefer currently, based on the current valuations in the sector.
Okay. And what is your price target on Oberoi Realty? This year, the stock has done well, but not as well as its peers. Why do you think that is? What's the reason for the underperformance compared to peers? And what's your target price there?
Yeah, so which is north of 1200, I think, on Oberoi Realty over there. I think, see, compared to peers, as I mentioned, a lot of it is launch driven, right? We are seeing the sales numbers being delivered by most of the companies. So Oberoi, obviously, we are awaiting for the large Thana launch, right, in Pokhran Road, and possibly the smaller one in Polshed Road sometime later this year. I think those launches will drive the numbers for the company. So I think it's just, another maybe couple of months away where we'll see that launch coming through. And based on the numbers they are able to deliver, I think the stock could again see some renewed interest. And they have announced a small project, obviously, in South Central Mumbai, and maybe more projects in the pipeline. So I think over the next 6 months, incrementally for Oberoi, as those launches come through, and also as their commercial, the rental properties start, right? The Commerce 3 office in Goregaon and the Borivali Mall, maybe another 2 to 3 quarters, these assets will also start contributing significantly. So all these factors together should see some investors taking some positions maybe in the stock.
All right, Adhidev, thanks very much for joining us, and I hope you keep coming back. It's a sector where there is a lot of interest, as one can see.